2023 conforming loan limits are out, and it's wonderful news for first-time buyers because now you can buy a high-priced home with minimum down. That's right. So now the loans that were considered jumbo loans in some counties, in some areas that required you to put minimum 20% down and you were not able to buy, now you can buy those homes. And in today's video, I'm going to share with you what those county loan limits are for different counties. And at the end of the video, share with you a real-time scenario that shows you what you can buy right now with these loan limits and what your rate's going to look like. So let's get started. Looking here at the board, conforming loan limits, like I mentioned here, have gone up all across the board. This is already in effect, even though these are 2023 loan limits. If you were to get a loan today, these loans have been already put into play. All lenders across the board, all lenders across the country. There's two different ways to look at this. Different counties may have different loan limits, but most of them are fairly very standard, with a handful of counties that have a little adjustment, but most of them look like this. So if the loan limit in your county was $647,200, anything above $647,200 in your county was considered a jumbo loan, then you'd have to put more money down. Now that loan limit has moved up to $726,200. Now you can purchase a home, which I'm going to go over at the end of the video. I'm going to share a real-time scenario, so I'll show you how that works. And then if you're in a high-cost county, for example, here I'm making this video in Alameda County. If you're in Santa Clara County, these are high-cost counties. The high balance loan was $978,000, and anything above that was a jumbo. Now, all the way up to, you can go all the way up to $1,089,300, and then anything above that now will be a jumbo loan. Now, let's look at some of these counties and what those loan limits are for these counties here in Northern California. So for San Joaquin County, the loan limit has changed to $726,200, and for Sacramento County, that loan limit has gone to $763,600. Now for the local high cost limits, Alameda County is at $1,089,300, Santa Clara County at the same rate, and so is Contra Costa County at the same rate. Those are the local counties here in the East Bay area and South Bay area, and other areas that are connected to the East and South Bay areas like Sacramento and San Joaquin County. There is also a link in the description that shows you different counties throughout the state of California and what the loan limits are. Now, let's go and look at two real-time scenarios that will help you understand how this loan limit has impacted the certain county and what kind of home you can afford in those counties. I can't thank you guys enough for having confidence in my video. It inspires me to make better content. Thank you for watching. Please don't forget to subscribe, like, and tell me what you thought and tell me how I'm doing, because I love to hear from you. Thank you again. So for scenario number one, we're gonna look at the city of Hayward, which falls in Alameda County, and we're going to look at if someone were to buy a single family home, what the numbers look like. So buying a single family home in Hayward, Alameda County, let's say the purchase price is $1.1 million, and in today's market, that is buying you a pretty nice 4 to 5 bedroom home. Let's say the down payment is 5% down, which is $55,000. Loan amount would be $1,045, still considered a conventional high balance and not a jumbo. Suppose the person has a credit score of 740, and at a 30-year fixed rate, you're looking at 5.625% with mortgage insurance of $252.54 because you're only putting 5% down. If you don't put the 5% down, this won't be there. But say if you have a 780 plus score, your mortgage insurance is only going to be $165.46. Now let's look at scenario number two for San Joaquin County, which is a pretty large county, and a lot of areas in this county are low income, but some cities in this county are high cost cities that have the Bay Area folks that bought homes there had driven the home prices to go up. So a lot of people in this county were not able to get conventional conforming or high balance loans because the home prices were higher, And a lot of people were not able to buy homes because they just didn't have the 20% down payment. But now that has changed. So let's look at this scenario. So suppose you are buying a single family home in the city of Tracy in San Joaquin County. Purchase price is $750. In today's market, that's buying you a decent 4 to 5 bedroom property in the city. Say 5% down, that puts you at $37,500. Your loan amount would be $712,500. Still a conforming high balance and not a jumbo. Credit score of 720. A 30-year fixed rate would be 5.805% with a mortgage insurance payment of $172.19. Now, if you had a score of 780 plus, that mortgage insurance will adjust to only $112.81. Now, you're probably wondering why the interest rate was a tad bit higher in this second scenario. Because in the first scenario, I utilized the Home Ready, Home Possible program that was put out recently, not put out recently, but that had a pricing adjustment. That's why I showed that. But in the second scenario, I use a regular conforming conventional high balance loan because there are income limits for each city for these Home Ready, Home Possible programs. If you are not understanding this aspect of the video, please click on the link below and watch the video that we did last week that explains to you how Home Ready and Home Possible programs work. With home prices seeing significant appreciation in the last 2 to 3 years, home buyers were waiting for conforming loan limits to go up so they can take advantage of this new pricing adjustment to buy homes that now they can buy with minimum down as compared to putting more down that they did not have available or they just weren't comfortable putting down because of the thought of volatility in the market. So you will start to see more home buyers come back on the market to take advantage of this scenario, especially the second scenario that I mentioned with home prices being high in the Tracy and Manteca areas, but the loan limits being low. We'll start to see more people buying homes in these areas. If you have not already gotten with a loan officer, I highly advise that if you were looking for a home before and you went on the sidelines or you stopped your search because of X, Y, and Z, I highly urge that you go back and talk to your loan officer and find out what the loan limits are in your county and what you qualify for. Now, if you're buying a home in Texas, California, and the state of Washington, I would be honored to help you. Click on the link below in the description, the Calendly link, and schedule a time to talk with me and my team, and we will be there to help you go through this whole buying process. That's it for today, guys. Thank you for watching. Until next time, this is Karan Singh.